Let's go over 3 easy to understand reasons why small cap stocks are heading a lot higher. Hey, I'm Luke Downey going over our latest insights at Map Signals. It is a really good one. We've been all over this small cap trade. And listen, if all you focus on are the Mag 7, you are missing out on a lot of other companies. So let's go into the number one reason you want to keep a healthy allocation to small caps. Really has to do with their recent leadership. You look over the past 3 months, the Russell 2000 has outperformed the S&P, the NASDAQ, and the Dow Jones. And you want to bet on strength in this market. The biggest rotation that is going on right now is small caps over large cap tech. Here we see a relative chart, and you see this big vertical bar that is telling you small caps are getting accumulated as big cap tech is being sold to fund that trade. So basically year-to-date gains, they are evaporating in this big rotation for mega cap tech. But let's keep going. The other main reason that we really like small caps comes down to yields. When yields go down, right? So here we've got the black line, that's the 10-year treasury yield. Whenever it peaks and it falls, you can see that small caps, it's the S&P 600, it actually goes up. So because rates continue to fall right now, the Fed is expected to cut rates. That is going to add a lot of ballast to small cap stocks. And here's the other main reason that you need to really consider small cap stocks is when the Fed cuts rates and we are not in a recession, there's not a recession a year later, look at the returns of the S&P small cap 600. A month later, it's up 4.8% on average. 3 months later, it's up 10%. 6 months later, it's up 10%. And 12 months later, it's up 19.3%. You can see that the winning rate is 100% for 6 and 12 months. So lower rates are very, very bullish for undercapitalized firms like small caps. But let's figure out one other reason to stay long small caps, and it is something that happened on July 16th. The Russell 2000 gained 3.5% in a day. You go back to 1984, that's happened 107 times. And check out the forward returns after a 3.5% or larger day for the Russell 2000. 3 months later, the Russell's up 4.3%. 6 months later, it's up 12%. 12 months later, it's up 27.7%. And 24 months later, it's up an average of 40.9%. So basically these big macro shifts, they tend to occur really whenever there's a big rate move. And that's what we're having right now. If we look at our data, Map Signals, where has all the money been going since that CPI report, that June CPI report? You can see 85% of inflows have been in small caps. So you've got all of these reasons to own small caps. If you're not focused there, you're going to miss tomorrow's leading stocks. It's happening right now. This is very bullish. You guys have a great one. Make sure to like and subscribe to our YouTube channel for insights like this.